as you know that the more the naira get devalued, the more we actually lose every other thing that follows. Then another thing is we want to attract foreign direct investment. They want a stable economy. They want where inflation is not too much. Then one thing we cannot run for, even though it's not within what we can control, is the global uncertainties. If you look at it critically, you see that the Iran-America war, even then Ukraine-Russia, you see that it actually affects our economy. So these are the things they're actually trying to use to protect, the economy by making sure that they maintain the inflation. However, we must also think, because most of those things that are actually affecting the inflation are not what we cannot control. The only one, like I said, is the global uncertainties, which is, the war. Other things such as food inflation, it's what we can actually work around. We can do off-season farming. We can encourage our farmers to be sure we produce our food. You can also look at insecurity. It's another thing that's actually affecting the inflation. So these are some of the things that we know we can control. So we need to find a way to control those ones that are within our power. Then those that are global shocks, we can also build up a shock absorber to actually control it.
For the average Nigerian watching us right now, what does a 26.5% policy rate actually mean for the cost of getting a loan in the bank?
Well, it simply means that for you to get money from Nigeria banks, for you to access capital, you need to trade off a lot of money. For instance, if you are to, for every bank now, if you go to, let's even start from MSME, for you to borrow money from a bank, you are going to pay interest rate between 30 to 35%. That simply means that if you borrow 1 million naira, within a year, you're going to pay 350,000 naira on it. Remember, cost of rent is not there, cost of production is not there, logistics is not there, and that's why you see that most businesses in Nigeria are trying to either source fund within or actually have to, close their business for now, and that's what we're actually facing. So until capital is accessible, that's when we can actually say yes, we can actually enjoy, and that will provide a job. The problem now is that government must be sensitive not to sacrifice growth to control inflation at all costs. We must also be sensitive, even though we could see that global shocks is one of the factors.
Yes, the MPL is 26.5%, but bank lending rates are much higher. Why is there such a wide gap?
It is expected. Remember, banks also have operating costs. They have risk premium they have to pay. They have the logistics they have to do. So if you give them 26.5, definitely they will have to add their own cost into it. And that's what built it up, that made it to go beyond 30%. So it is expected when in fact, borrowing itself have its costs. You have to do documentation, you have to do operational costs, you have to also do risk premium. A lot of costs also surround it, and that's why they have to add their own when they are giving out. And more so, the lag time, the time at which they are bringing 26.5% and the time it will reflect in the market is also an issue, that before it actually shows in the economy. So the operating cost also is one of the reasons why they will add to 26.5%.
Now, inflation is moderating. If it continues in this downward trend, when can Nigerians realistically begin to expect cheaper consumer, business and mortgage loans?
Right. So when we say easing, I think we have seen that global shock is what actually bring it back to where it is now. Before it has reduced consecutively over 5 times. And we are hoping that it will continue. Even the CBN also in their communique said if there is no shock, if there is no any other problem, they are likely going to reduce it. The fact is, if this war continues, I'm not sure it will come. And that's why I said there are some that are within our control, like the food inflation. If you look at the food inflation, it's even higher than headline and core inflation, as it were. So if we can actually control that is within us, if we can also control the insecurity that is within us, the cost of transportation, I think we can use that to actually reduce the inflation. And for Nigerians, so start getting the ease. For me, maybe it's when we have MPR around 20%, and thereby we'll be having maybe the cost of borrowing will be around maybe 22 to 30%. At that level, we can say yes, we get some level of relief in that area. But without that, I'm not sure we can do it. So we should maximize the one within our power and find a way to absorb the shock that will come globally. It is an uncertainty. In fact, it could even be more force majeure, but we must prepare to manage it as it were.
All right, let's now bring this down to the business community. How are high borrowing costs affecting MSMEs, manufacturers, and even larger companies?
Well, the manufacturers itself, remember, they have to look for alternative to source money. If it's small business, yes, small business can actually source money internally. Maybe you reinvest your profit. But when it's come to big companies, there is nothing they can do without actually getting capital. And because if they don't get capital, that simply means that their production will be stalled. That simply means that they will reduce their employment. That simply means that the actual everyday activities will actually reduce. So the cost is very, very high because it makes them to down tools. It makes them to lower their level of production. And that's why it is critical that if at all it's like this, we can also find a way to actually establish another way that people can actually source credit. I saw government creating credit core to actually allow people to source from, but for manufacturer, that is way too small. So there needs to be bigger opportunity for them so that they can tap from it. Remember, if they are able to tap and get some capital, it will lead to more employment, it will bring more growth, and when you experience this it will also affect our GDP positively. So these are what we must look at critically and make sure that we create availability for them. Because if you look at our GDP, what is actually driving it is service sector, which is much more of portfolio investment that cannot create the expected job in Nigeria.
But Doc, do you think it's fair to put all of these on the CBN, or does government also need to tackle other fiscal and structural challenges like power?
Right. So, and that's why I made it clear that there are some that are within our power that you don't even need to go to CBN. Like the issue of insecurity. CBN has nothing to do with insecurity. But if we have a lot security enough, I know investment will have confidence to come into Nigeria. And also the issue of food. We have Ministry of Agriculture, we have Bank of Industry. Those are still fiscal measures that can be looked